Trading traditional support and resistance is great, but here's the problem. Most levels people draw are static. The market isn't. Volatility changes, structure changes, and what looked like a perfect line can become useless the moment the swing framework shifts. That's exactly why this indicator exists. Swing structure bands, ChartPrime, builds adaptive bands directly from swing highs and swing lows, so your support and resistance aren't random price points. They're structure-aware reaction zones that update as the swing develops. We're going to set this up on TradingView using BTCUSD on the 1-hour time frame. If you haven't signed up for TradingView and you want the same layout I'm using, there's a link in the description. Once you're on BTCUSD 1H, click Indicators, search Swing Structure Bands ChartPrime, and add it to your chart. This script is also open source on TradingView, which means you can inspect how it works instead of trusting a black box. Once it loads, you'll notice three main things right away. First, you get a top band system in your bearish color and a lower band system in your bullish color. Second, you'll see swing markers labeling swing high and swing low, which makes it obvious where structure actually confirmed a turning point. And third, you'll see diamond markers that highlight reaction zones, which is where the indicator wants you to pay attention for entries and exits. Here's the core concept in plain English. The indicator continuously tracks the most recent swing high and swing low across a configurable swing window, then measures how long price has been developing since each swing point. Instead of using a fixed moving average length like 50 or 200, the moving average length grows with the swing itself. So if the market is building a long, clean swing, the band length stretches and adapts with it. If structure breaks and the market shifts, the system resets and starts building fresh swing-based bands again. That's why it stays in sync with real market behavior instead of lagging like a normal moving average channel. Swing detection is based on a simple idea. A swing high forms when price creates a local maximum relative to your swing lookback, and a swing low forms when price creates a local minimum relative to that same lookback. When price transitions from forming highs to forming lows or vice versa, the direction flips. Each confirmed swing gets marked on the chart, so you're not guessing where structure changed. You can literally see it. Now let's talk about the bands themselves. The upper bands are derived from swing highs, and the lower bands are derived from swing lows. As the swing keeps developing, the band length automatically increases. On top of that, the indicator applies ATR as an offset to create envelopes around each band, so you get a volatility-aware structure channel instead of a single thin line. And there's also a volatility filter. If the band starts moving too aggressively relative to ATR, it can be temporarily disabled. That's a safety feature designed to avoid noisy, unstable conditions during sudden volatility expansions. The diamond signals are not meant to be breakout signals, they're reaction signals. The indicator's logic is basically this. Sell signals appear when price crosses down from the upper swing band after the band has stabilized, and buy signals appear when price crosses up from the lower swing band after stabilization. It also uses cooldown logic to prevent signals from clustering too tightly together. So you're looking at structure reactions near adaptive bands, not random mid-range entries. Now let's go through the exact settings you showed so your chart matches. In the Inputs tab, you have Swing Length. This is the swing lookback window. In your settings, it's set to 100. The higher this number is, the more the indicator focuses on bigger swings and gives you fewer, cleaner structure points. The lower it is, the more sensitive it becomes, which means more frequent swing highs and swing lows and more frequent reaction opportunities. If you're more swing-based, keep this higher. If you're scalping and you want more signals, reduce it. Next is MA type. Yours is set to SMA, but you can switch between SMA, EMA, SMMA or RMA, WMA, and VMA. This changes the feel of the band. SMA is smoother and steadier. EMA reacts faster. VWMA weights volume into the average, which can make bands respond differently in high-volume moves. There's no perfect choice. Pick the one that matches your style, then stick with it long enough to learn how price reacts to it. Then you have a checkbox called Bands. This simply turns the band system on and off. Leave it enabled because the bands are the whole point of the tool. After that, you have bear color and bull color. Your bear color is set to that purple-pink tone, and your bull color is green. This doesn't change the logic, only the visuals, so choose colors that are clear on your chart theme. Now, the Style tab is where you control what actually prints on the chart. You'll see top band middle, top band upper, and top band lower. These are the three lines that form the upper band structure. Middle is your core band line, and upper and lower are the envelope lines around it. If you want a cleaner chart, you can turn off the upper and lower envelope lines and keep only the middle line. If you like more depth and clearer reaction zones, keep all three enabled. Again, you'll see low band middle, low band upper, and low band lower, which is the same idea for the lower band system. Again, middle is the core, and upper and lower are the envelope lines. If your chart feels too busy, reduce it to the middle lines only. Then you'll see your signal plots, sell and buy, shown with diamond shapes. In your Style tab, the signal location is set to absolute. Keep it on absolute so the markers plot where the script intends them to plot, instead of floating above or below candles in a generic way. This keeps the signal tied to the structure reaction context, which is what makes it useful. You also have pane labels. If you don't want extra text on your chart, you can disable pane labels. If you like seeing quick labels for clarity, keep them on. Under output values, you have precision set to default, plus toggles like labels on price scale and values in status line. These are TradingView display options. Labels on price scale puts indicator values on the right side price scale. Values in status line shows values at the top of the chart. They don't change the indicator, just how much information you see. And finally, you have inputs in status line, which simply shows your current settings up top. If you're recording videos or sharing screenshots, it can be helpful to keep that on. Now let's get into how to trade this on BTCUSD 1 hour in a way that's simple and repeatable. The first step is to use structure to decide direction. If you're seeing price confirm higher highs and higher lows with swing markers stepping upward, you treat the market as structured bullish. In that case, your lower green band becomes your dynamic support zone. If you're seeing lower highs and lower lows with swing markers stepping downward, you treat the market as structured bearish, and your upper purple band becomes your dynamic resistance zone. Let's start with a long setup. We want a structured uptrend, meaning swing lows are holding and swing highs are being made. Price will often pull back into the lower band during an uptrend because that's where the swing-based support is forming. When price approaches the lower band, you don't buy in the middle of the move. You wait for price to interact with that band and then give you the reaction. Your trigger is the band reaction plus the buy confirmation. The indicator is designed to print buy signals when price crosses up from the lower band after the band has stabilized. So the clean entry is this. Price pulls into the lower green band, you see a rejection and then a pushback above the band, and the diamond buy signal prints. For extra confirmation, I like seeing a strong bullish candle, like an engulfing candle or at least a clean close back above the band. Your stop loss should be placed where the setup is clearly wrong. The clean rule is to put it below the most recent swing low marker, or below the lower band envelope with a bit of breathing room, because if price breaks that swing low in an uptrend, the structure you're trading is no longer valid. For take profit, keep it simple. Target 1.5R first. That means whatever you risk, you aim for 1.5 times that amount. If you want a structure-based target instead, the most logical place is the upper band or the most recent swing high zone, because that's where the market has reacted before. If you hit your first target and the trend is still clean, you can leave a small runner and trail it using new swing lows as they form. Now for a short setup. Everything flips. You want a structured downtrend where swing highs are failing and swing lows are being made. In that environment, the upper purple band acts like dynamic resistance. Price will often retrace upward into that upper band before continuing down. You wait for that pullback to reach the band, then you wait for the reaction. Your trigger is the sell reaction. Price tags or slightly pierces the upper band, then crosses back down from it after stabilization, and you get the diamond sell signal. Again, I like seeing a bearish continuation candle as confirmation, like a bearish engulfing candle or a strong close away from the band. Your stop loss goes above the most recent swing high marker or above the upper band envelope with some room. If price breaks above that swing high, the structure you're trading is no longer bearish in the way you need. Your take profit is again simple: 1.5R as a first target and optionally the lower band or the most recent swing low as a structure-based target. If the move is strong and structure stays bearish, you can trail the rest using new swing highs as they form. One important thing to understand is what these signals are meant to do. They're not telling you to chase, they're telling you where structure is reacting. That's why this works best in markets with clear swing development and during phases where the market transitions from impulse to correction and back again. Now, if you're a ChartPrime Pro user, ChartPrime also talks about having tools like a trend assistant that can act as an extra trend filter alongside your band reactions. The idea is simple: let the trend filter keep you on the right side of the market, and let swing structure bands handle entries near structure. And if you want to take it a step further, ChartPrime also promotes Prime Automation, which is their bot platform where you can sign up for free and build automated strategies that can use ChartPrime indicators. If you're into automation, that's something you can explore after you've proven your rules manually first. This is not financial advice. Everything here is for education only. Always build a full plan around your own risk tolerance, test your rules on BTCUSD 1 hour, and keep your risk tight so one bad trade doesn't wipe out your week. If you enjoyed this video and you want more indicator breakdowns like this, don't forget to subscribe. And if you want to connect with other traders, you can also join the ChartPrime Discord. Thanks for watching. See you next time.